Hey guys, it's Angelo Christian. Thank you so much for checking out Real Estate Insider. And today we're actually going to be focusing on first-time buyers. You know, it's June 2020. We're trying to get through COVID. And one of the biggest areas that we help is first-time buyers. So we are a nationwide lender. We're based out of Houston, Texas, and we love to help Texans. We're one of the largest Texas lenders in the country. And today we're talking about the different first-time home buyer loan programs that are out there for millennials. So this is in search of the best first-time homebuyer loan programs, explaining the differences to educate all of you out there if you're a first-time buyer to find out what exactly is the best home loan program. And I've been doing this for over 2 decades, 20 years, and helped tens of thousands of people. And we've closed over $2 billion in loans. So I do know a little bit about the space, and so today I'm going to be educating you and teaching you about the best home loan programs for first-time buyers. What comes to mind is 4 different products that are the most popular for first-time buyers. There's FHA, there's conventional, and there's USDA, and there's VA. So there's 4 different loan programs that are out there for first-time buyers, and you can get these all over the country, whether you're in Hawaii, Florida, California, Texas. And so we're going to be going through the different pros and cons of each one, the requirements and the benefits. And I have it behind me on the board that you can kind of take a look at the different requirements for FHA, VA, USDA, and conventional loans. So the biggest thing is that the government's really big about helping people to spur the economy, help people to be able to buy a home and get pre-approved. One of the things that we do here with our company for first-time buyers, we have closing cost assistance. You can get closing cost assistance up to 3%, where either the seller can pay your closing costs or you can put the closing costs into the loan. So then that way you don't have to pay the closing costs out of pocket. So that's a very, very powerful thing. The other thing that we really shine at is that with our program, you can get up to 1 month no house payment after closing. So that can really help you to give you a break. So if you close on your home, you don't have to make your first month's payment. And then the other thing that's really cool, we can give you closing cost assistance and credit boosting. If you have let's say a credit score of 600 and the program, like right now, for example, with FHA requires a 660 credit score, then we can help you to boost up your credit score. Okay, and we can go through the process to show you actually how to boost up your score to get you qualified for the loan. So the first thing with FHA is there are loan limits for FHA. For FHA loans, based on the county that you're in, there's going to be a loan limit. Typically, the loan limits are around $350,000 plus or minus, depending on the county that you're in. If you're in like Los Angeles County, though, the loan limits are like $700,000, and that's for a 1-unit home. If you buy a 2-unit, a 3-unit, a 4-unit, then the loan limits are going to expand. The more units you purchase, and as long as you're occupying them, it's for owner-occupied only. All of these first-time buyer programs are for owner-occupied only. Then you can go up to a higher loan amount. For example, if you buy a 4-unit, an FHA loan in LA County, you can go over $1 million purchase price. But if it's just 1 unit, then you're capped at like $700,000. So it depends on the type of property that you're going to buy. The benefit with FHA is that it has fair credit score requirements. So like right now, the credit score requirement is 660. Prior to COVID, it was down to 580, and I suspect as the economy gets back to on its feet, we'll loosen up those credit guidelines, and you'll be able to purchase a home again with FHA with a lower credit score requirement. The other thing is that it's very liberal on the debt-to-income ratio. So if you have more debt from student loans or things like that, they're more liberal on the debt ratio. So that's really important because you can go up to generally a 50 to a 55% debt to income ratio that can help you to qualify for more house, right? So, and you have more options. There's no location restrictions. You can purchase wherever you want. There's no income cap. So the FHA is very powerful in that regard. Now VA, in my opinion, is the best home loan that you can get, because with VA there is no mortgage insurance, no monthly mortgage insurance. There's no income caps. There's no location restriction. However, you do have to be a veteran. You've had to serve in the military and be honorably discharged in order to qualify for a VA loan, okay? But you can do zero down. It's zero down, 100% financing. You can still get the closing cost assistance, which is very powerful. Like FHA, you have to put 3.5% down. And with FHA loans, there is monthly private mortgage insurance. The private mortgage insurance stays on the loan forever. The only way you can get off of the PMI is if you refinance to a conventional loan. Okay, but VA has no monthly PMI. It's 100% financing. You can get all your closing costs included. There are loan limits for the VA. So depending on where you're going to live, in the county, the VA loan limits are usually anywhere from 4 to 500,000 on the general counties, and higher income, higher balance counties like for example, Los Angeles County, counties in New Jersey, New York. In Miami, Florida, Brickell, Miami-Dade, those have higher loan amounts because the income per capita is higher, so the loan amounts are going to be higher. But you can use VA for condos, townhomes, single family, as long as it's owner-occupied, you can do it. USDA is how I got started in the industry, learning these. A lot of lenders don't like to do USDA. I love USDA loans. They're zero down, they're 100% financing. You do have to have better credit for the USDA, typically 680 or higher. They are more strict on the debt to income ratio. Your debt ratio really has to be below 41%. And there's more restrictions. There's location restrictions. It has to be in a rural area, usually with a population below 20,000 people. So you can't use the USDA in Houston, Texas. But you can go on the outside of Houston, for example, like Porter, Texas, the outskirts of Katy, Texas, for example, the back of Conroe. So you can use it on the hubs of major cities or in small rural towns. And there's also income restrictions. If you make too much money, you cannot do the USDA loan. You have to do a conventional loan or an FHA loan. Generally, with the USDA, your income has to be usually for a family of 4 or less, under 100,000 a year. If you're a family of 5 or higher, you might be able to go up to 150,000 or more in income. But they're really strict on the debt ratio, but it's a very, very good loan program because it's zero down, 100% financing, and you can get all your closing costs included, okay? The other first-time buyer program that's very popular that we do a lot of is conventional. And I prefer the conventional loan over the FHA loan because the mortgage insurance can come off of the loan when you hit 80% equity. You can take the PMI off the loan so your payment will be cheaper. Now, you do have to have good credit usually for a conventional loan, usually a 660 or higher to get approved for the loan. A lower debt to income ratio. Generally, your debt ratio has to be below 41%. But you have more options. There's no income restrictions. There's no location restrictions. There are loan limits. Okay, so the loan limits are going to be based on, again, the county. The conforming loan limits can be anywhere from $400,000 to $700,000, depending on where you're buying in the United States. Like, for example, in Texas, it's $510,000 loan limit in most of the counties in Texas. In New York, it's 700,000, 800,000, right? And obviously, the more units you purchase, like for example, a 2-family has a higher expanded loan limit than a single-family home. So these are the different types of first-time buyer programs, and we do all of these loans here. So if you need help with getting funding and getting pre-approved, please reach out to our office. You can actually contact us. We're open 7 days a week. You can call us at 832-431-6331. You can also, if you click on the link below, you can actually apply right there to help you to get pre-approved. We can help you assess your situation, try and figure out how to help you to get you approved for the loan, get you a pre-approval letter so you can get out there and start shopping. We also do the realty. Not only are we the lender, we can also help you with the realty to help you to find your home search as well. So that's another really, really great aspect about us. So give us a call if we can help you. If you have any more questions or you want more information, you can reach us at 832-431-6331. Or again, click on that link below to get signed up. And I want you to check out my next video.